It seems like perma-bull Tom Lee has turned bearish on his latest interview on Tuesday, and in this video we're going to go over the main points he went over on that interview. So he's pretty much saying the market right now is more focused on growth worries than inflation. So it's pretty much in line with what Morgan Stanley's Mike Wilson said in my video yesterday. But on top of that, I also want to share with you this chart. It shows you the recession worries that the market is currently having. The chart shows you the 10-year and 2-year Treasury yield spread, right? It went above zero briefly on August 28th. It's pretty much a recession indicator because if you look closely in history of the recession, which is the gray shaded area, it only happens, right, at least for the past 4 recessions, it only happens after the spread between the two yield recovers or goes back above zero. And I also want to share you this chart. This chart is more supporting Tom Lee's argument about growth scare or growth worry, because this chart shows you the US real GDP forecast by JP Morgan economists. And it's showing us that in Q4 2024, the GDP forecast for US is only at 1%. But a year ago, Q4 2023, that figure was at 3.4%. So it's showing us that maybe the growth is going to slow down significantly. Tom Lee also said the upcoming job report will have a significant impact on the market reaction in September, which is again in line with what Mike Wilson said in my yesterday's video. And this chart shows you the VIX fear index. As you can see, the spike represents the August 2nd non-farm payroll report release, representing the job market for July. Okay, and the August non-farm payroll job report will be released on September 5th, which means we're still 3 days away, but the fear index has already went up to 21 today. So people are worried about the upcoming non-farm payroll. Tom Lee has also recognized that the July job report was a shock to the market and contributed to a market decline we saw about a month ago, in line with what Mike Wilson was saying. So pretty much saying it's important to watch the non-farm job payroll because it's going to significantly affect the price action of the S&P 500. And the August job report is expected to show a rebound in growth in jobs. And in this chart, you can see economist consensus right now for the upcoming September 5th non-farm payroll job report. As you can see, the column for forecast is showing you 164K. It's a lot higher than the previous 114K. Okay. And Tom Lee also said you don't want the job report to be too strong, because by having too strong of a job report, it might lead to concerns that the Federal Reserve could reverse a potential rate cut in September, meaning no cut in September if the job is too strong. Okay, and Tom Lee also mentioned that September is historically a weak month for the market, often leading to lows in October. And this chart is showing you S&P 500 20-year seasonality chart. As we can see, September, October is pretty weak. Tom Lee has also mentioned that investors should be cautious for the next 8 weeks due to potential market volatility. The market has been very strong this year, with 7 out of 8 months showing positive performance. But because we are going to have September first Federal Reserve rate cut, and we're going to have election or getting closer to election, it's going to make people nervous, okay? And there's a saying in the Wall Street called sell the news, right? When people are anticipating a rate cut, the market may go high, but when the good news comes out, which is when they actually cut rate, it may negatively impact the price. And Tom Lee suggested that a 7 to 10% market correction can happen, right? It's likely within the next 8 weeks. But despite the potential correction in the market, Tom Lee views this as an opportunity to buy the dip. Okay, so pretty much he's saying longer term, Tom Lee is still bullish. Okay, he doesn't think it's going to be the top of 2024. Okay, he's saying the market could potentially go higher from there. Okay, that's all I want to share with you. Thank you for watching. Please don't forget to subscribe. Bye.